Welcome everyone to Vested Interest. This is Shane, and this is our weekly portfolio update. Now, we typically do these on Sunday mornings, but I was unable to access my bank account again to see or to actually get the information to cover what I had already purchased for last week. So this is going to come to you a little late here on Monday afternoon. We did add $2,318 in new capital into the portfolio. We also did do a sale. I know it doesn't say reallocation of funds here. I typically do that as well, but since this is coming out late, I didn't update this slide. But we will go over the reallocation of funds. But before we do that, I would like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. Now, for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio on a weekly basis, and I cover that update every week. I also do larger purchases if I have funds from a bonus or do a side job, something along those lines. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. I don't have any other sites for you to sign up to. I'm not trying to send you anything to pay for. Again, we have plenty enough to pay for, but if you would like to help out the channel, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. Again, I do these portfolio updates once a week, typically on Sunday mornings. I have been having a trouble the last couple weeks accessing my account to go over what I purchased. We will also cover the options I was in for the week if we run any on the weekly portfolio update. Drop any comments down below that you may have or questions that you may have. I'll try to get to those as well. And let's get into the video here. Starting out with options, we did have some options or one option hit. We sent out 3 or 4. This is the one that got hit. It was for BABA. On October 7th, that was last Monday, we did a covered call, which means we own 100 shares of BABA. So that's what a covered call means. You have to own the shares. -1 means one contract, and one contract represents 100 shares of BABA, ticker BABA. This is a Chinese company with a strike price of $130. So if it was at 130 or above, these would have been called away. It was not. And actually, this was a little higher than I should have went. I should have went down in the 120s and could have got more premium. But we chose 130 because if it was called away, that's the price we were comfortable selling at. The expiration date was October 11th, which was last Friday. And for that, we received $1.04 per share. So after the fees, the 55 cents in fees, we received $103.45. That went right back into the portfolio. All options premium is invested the week we get the options premium. As you can see here on the 11th, that's the expiration date. It did expire. It expired out of the money. That means it was less than 130. We keep the $103.45, and we keep those 100 shares of BABA, and we will probably look to run another covered call on Monday today, which I did throw out just for awareness. I did throw it out. Now I'll have to see if it hit or not. I won't find that out till in the morning, or I could jump back in. It's actually should be after 4 by the time I put this video out, so I may jump in there and see if it hit. We put out 3 or 4 more options play this morning. We'll see if any of those hit. Now, next up, this is the reallocation, and yes, we did sell our shares of Bank of America. Here you can see we sold out of 162 shares. Actually, it was some fractions of shares, 162 and some fractions of shares, but they didn't close out that fractions of. I think we got another, $6 or something like that later on. But for the most part, we received $6,473.70 for the sale of the Bank of America shares, ticker BAC. This is out of the financial sector. So there you can see that $6,473.70. That's represented here. We did reallocate that. We picked up shares of Lam Research Corporation, ticker LRCX, and that is out of the information technology sector. We picked up 84 shares. Now, as you can see here, we actually added some capital. So part of the new capital allocated did go into buying some of these LRCX shares, because we invested $6,809.93 shares into this new position, which accounted for all of the Bank of America funds plus about $400 and some change we added to that as well to get to this 84 shares. I am not saying we added any passive income because this is actually with the sale of Bank of America, with Lam Research being such a small dividend payout ratio, much lower than Bank of America, we lost income. So I'm not going to show that here. I will show it on the final slide to show you where we ended up. We did lose a bit of income, so I'm not saying we added any passive income. This would actually be in the negative if I did the math. But again, since this video is coming out a little late, I did not do that math. You can do that math if you'd like. 162 shares out of a portfolio minus the dividends paid. That will tell you how much was lost. 84 shares added to. That would tell you how many how many funds were lost out of the Bank of America share. 84 times their payout will tell you what was added back in. It is a negative. Now, this is part of the new capital invested. We did add $1,348.63 on October 7th. With those funds, we picked up 2 shares of Cisco Corp, ticker SYY. This is out of the consumer staples sector. This is actually one of the companies that we had on our stocks to buy for October list, so we're continuing to nibble here. 2 more shares at $74.75 per share. Google, we're continuing to build out this position. That's Alphabet, ticker GOOGL. Picked up those 4 shares out $164.66, and GOOGL is out of the information technology sector. 6 more shares added to our Vale position, ticker VALE, is out of the materials sector. This is a mining company out of Brazil. $11.46 per share on those ones. Added 1 more share to our Schwab Strategic Dividend Growth ETFs, ticker SCHD, before the dividend split there. Picked up that 1 share at $84.75. Now there was a dividend split here, so you got a 3-for-1. So I will get 3 shares whenever it splits. I believe they've already split on Friday. I believe that's part of the reason that my bank was doing maintenance, because whenever I looked in Friday morning, they hadn't shown the split yet, and it still showed the shares that I had. So I'm assuming that's part of the update that they did to figure out how many shares everyone was getting of SCHD. But that was a 3-for-1 split, so the price is going to go down, so it won't even be close to that. So if you look at SCHD this week and you see that it's way down in the 20s, don't freak out. That's a 3-to-1 stock split. It's supposed to do that. But you should also get 3 shares for every 1 share you had previously as well. Now, Haverty Furniture Companies, ticker HVT. This is out of the consumer discretionary sector. We added 4 more shares here at $26.22. And if I didn't mention it, SCHD is an ETF, and it's part of my weekly buy, so I buy at least 1 share. I'm going to adjust that a little bit. Since they did a 3-for-1 stock split, I'm going to do 3 shares a week instead of just the 1, because 3 shares should equal the 1 hypothetically going forward. And last, on the 7th, we added 1 more share to our Vanguard Total Stock Market ETF, ticker VTI. Picked up that 1 share at $282.14. Another one. This is one of my weekly buys, so I will be adding 1 share of VTI every week for the foreseeable future, and 3 shares now of SCHD since they did the stock split. Now, we weren't done. We went in and added an additional $628.98 on Friday, October 8th, or I'm sorry, on Tuesday, October 8th, the very next day. So we did all our buys early in the week. And with those funds, we picked up 1 share of Nutrien, ticker NTR. This is out of the materials sector here. Picked up that 1 share at $47.98. 1 more share towards our Vanguard Total Stock Market ETF, $282.20. Picked up that 1 share of VTI. 1 more share of SCHD, Schwab Strategic Dividend Growth ETF. We picked up that 1 share at $84.18. 10 more shares to our Vale position, ticker VALE. We picked up those 10 shares at $11.02. And 4 more shares to our Haverty Furniture Company. You can see where I was focused on Vale and HVT this week. But 4 more shares to our Haverty Furniture Company's position, ticker HVT. Picked up those 4 shares at $26.11. And again, I'm not saying any passive income was added. We actually lost a little bit of passive income because of the sale of Bank of America this week. Total invested $2,313.84. And even with the new investments, we did lose $30.46 in passive income from last week to this week. So you will see whenever we do the overall review of the portfolio, it is down a little bit. So womp, 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 going backwards again. Don't like that. But I do like the Lam Research position a little better than the Bank of America position. Bank of America was one I was up on, but it was also one that Warren Buffett has been selling a significant portion of his portfolio out of. So I'm not sure if he sees something wrong with the banking industry or not, but I definitely see more growth in the dividend going forward with Lam Research than I do with Bank of America. Now, a quick run through the sector weights here. As you can see, communications makes up 10.39% of the portfolio. Consumer discretionary at 5.55%. Consumer staples makes up 9.25%. Energy is sitting at 5.80%. Financials, this small sliver here, the smallest sliver of the pie, sits at 2.72%. And that has really shrunk since we sold out of Bank of America. But SCHD is heavy in financials. So that's another reason I was comfortable selling out of the Bank of America position. SCHD is pretty heavy in financials. Healthcare sits at 14.03%. Industrials makes up 6.52%. Materials at 11.28%. Technology at 11.28%. Materials at 8.72%. So technology is starting to become one of the bigger positions in the portfolio. That is by design. Utilities makes up 8.98% of the portfolio. REITs and real estate sits at 8.84%. ETFs starting to climb up there at 7.94%. It will not be long before ETFs is the largest position in the portfolio. Now, here it is, and these were guesstimates on the numbers. I'll update the numbers firmly for SCHD. I did a little bit of math here, not being able to get into my portfolio last week. I just did a divide by 3, basically. Multiply by 3 for the shares and divide by 3 for the average share price for SCHD. So this is the best guesstimate I had before I got the numbers. I'll be able to update this more firmly for this week's update. I'm going to get in and do the update on Friday when the market closes at 4 o'clock instead of waiting until Saturday. So if they do have some maintenance, I won't be stuck pushing this out late again. But here you can see the ticker. These are all the positions in the portfolio. And in my opinion, it is important for folks out there. Some of you are new investors. Some of you may be just getting started. Some of you may be on the fence about whether to start investing. And some of you who may have started already, maybe you're seeing some red in your portfolio and maybe getting discouraged. So it's important, in my opinion, for you to see a real portfolio built out of over time from a real person. I do not have a background in finance. I didn't go to school for this. My parents are not wealthy, so they didn't teach me this. As a matter of fact, neither one of my parents even graduated high school, if I'm being completely honest. So they are not great with finances, never have been. So I've learned everything on my own going along the way, made some mistakes along the way. So that's part of the reason I'm open about this as well. So hopefully you can learn some of my mistakes and don't repeat those mistakes. But the reason I want to show this portfolio is that if I can do it as an average person, just like you are, go to work every day. I'm married. I have 2 kids. I have 3 dogs and a cat. You know, I do other things outside of this. This is not my main focus. But if I can do it, you can do it as well. So that's why I show my portfolio out in the open, fully transparent every week. What I'm doing, what I'm buying, what I'm selling, any options I'm in, any dividends I received. You're going to see that weekly on this channel. And I'm going to continue to do that because I think it's important, again, to help some of you out there who may be on the fence, to show that you can do it too, to get investing. For some of you out there who have already started, maybe you're seeing some red, like you see these positions that are down. That doesn't mean they're bad positions. That just means they're down right now. If they're good companies and the fundamentals of the company have not changed and you see red, that should be a buying opportunity. Warren Buffett famously says, if you can't handle a stock dropping by 50%, you shouldn't be invested in the stock market, because it's going to happen from time to time. But total shares here in this column, current price as of the close of business on Friday. Actually, I went in Saturday and used the numbers that I could pull. Market value as of the close of business on Friday, average cost per share in this column, my purchase price. So this is what I have into each position. This does include reinvested dividends. Total return, whether I'm up or down, you'll see it here. Obviously, if you see the red, that means I'm down. Percent return here. What sector every company falls under here. Quarterly, monthly, semi-annual payer. Current dividend yield as of the close of business on Friday. My yield on cost. Excuse me. The portfolio weighting in this column, what you saw in the previous slide was each sector's weighting. This gives you each individual positions, and I do have a rule in my portfolio outside of ETFs. I don't want any one position to be more than 10% of a portfolio, and I don't want any one sector to be more than 20 to 25% of the portfolio. Estimated annual income in this column. Payout months, where they pay out, what months they typically pay out. Sometimes this does fluctuate from month to month. VTI, for example, did not pay out in September. They paid out in October, the most recent one. Dividend growth year over year, and where that sits at 15% of a 52-week low. So total current shares sitting at 6,074.507 shares. Market value at 313,248,000. My purchase price, I have $277,676.22 into the portfolio. Total return, $35,572.45. Percent return here, 12.81. Nice to see, but that's not what I'm focused on. Over here, current dividend yield of the overall portfolio sitting at 3.803. This has gone down as the market's gone up. That's typically how it works. My yield on cost, 4.291%. And this is what I'm focused on. That's why it's circled in red. Sits at $11,913.76. Again, slightly down from last week because of that sale out of Bank of America, adding in the new LRCX position. We're going to continue to build this out. I want to get to at least 100 shares here, maybe 100 to 120. We'll see. As long as it stays close to its $82 cost basis, I'm probably willing to pay up to $85. You can see here the cost basis is actually a little higher right now than where they sit at 15% of a 52-week low. So I'd love them to pull back. Another reason I didn't mind making this switch, as you can see, LRCX pays out in the January, April, July timeframe, which I needed some more in those months to kind of help balance out the portfolio payouts. And I'm heavy on the March, June, September, December timeframe, and that's when Bank of America used to pay out in the portfolio. So I've added a position in the January, which I think will serve me better in the long run. They're growing, right? Double-digit growth at 15%. Bank of America was around 8%, so I like that higher growth, even though it is a lower current yield at 1.13% versus Bank of America's 2.8, I think it was. So we lost some yield, but we added some dividend growth, and I think long-term this position has some more upside as far, in my opinion, as far as I'm concerned. So $11,913.76 is a little lower than we were last week. A little bit of a drop there with that sale. Current dividend growth has increased up to 6.24%. Obviously, this will change. As you can see, there are still some that are listed as zero. BABA, we don't know what their growth is going to be like. They only have started paying out a dividend this year. Same thing with Google. We don't know what their growth is going to be like, but I'm expecting double digits. What I'm hoping for is something around LRCX's Lamb Research dividend growth of 15% for those two positions, which would bring us closer to 7% dividend growth. So trying to get a little bit more dividend growth with potential future upside versus some of the slower growers like Bank of America that we purged out of the portfolio. So let me know what you think of this change. Let me know, have you made any changes in your portfolio? Would love to hear from you. And let me know what you think of the recent purchases. What are you buying? What are you selling? Would love to hear from you in the comment section down below. And options. Are you running any options in your portfolio? If so, on what positions? Well, again, this one was late, so as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a comment, question, or if you have a stock you'd like me to cover in the Stock Pick of the Day series, which I do Monday through Thursday, that will be the other video coming out today. Drop it in the comment section down below. I'll try to work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money to never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.